from the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up over the next hour, it is the main event as Epic Games takes on Apple in a major antitrust trial. Epic CEO Tim Sweeney takes the stand. We're going to have the play-by-play the first day in court. Plus, Power Play. Tile CEO CJ Prober, who sits on the Coalition for App Fairness, says Apple's dominance means it's no longer a free market. His perspective on Epic's case and the industry just ahead. And a triple thread. Stitch Fix is bringing in $2 billion in revenue, will soon have a new CEO, and is ready to embrace the return to work crowd. I'll talk to outgoing and incoming CEOs Katrina Lake and Elizabeth Spalding. All those stories in a moment, but first, U.S. stocks trimming their advances. Tesla and Amazon weighed on the NASDAQ. With more on that and the day's biggest tech movers, let's get to Bloomberg's Kriti Gupta and Ed Ludlow. Kriti, take it away.
Well, Emily, it all started today in the green, and then we turned things around. A lot of this just had to do with the ISM data, manufacturing data, that massive boom you saw there slowing down, and why it's all about the chips. And you saw that unilaterally hit big tech, and of course, weighing on the S&P 500, not enough to drag it into the red. It was enough to drag the NASDAQ in the red. You can just really see that in the massive underperformance, the New York FANG Index, down 1.2% on the day. Flip up the boards, and I want to show you what it did to semiconductors and autos, because of course, that is going to be the clearest read through here. When you start to have that show up in the stock price for semis, it looks like it's going to translate to the stock price for autos as well, because that's the industry that's most hit by it. You can really see the two indexes tracking each other quite well. And then lastly, I want to hit crypto, because that, of course, is the major story of today as well. Ethereum outperforming Bitcoin. And of course, you've seen this pull back just a little bit, but earlier in the session, Bitcoin was up 2%, Ethereum up a whopping 11%. That's going to be a divergence you really want to watch. Ed, what are you watching?
Yeah, downward pressure on social media stocks. Facebook down by 0.8%. The Independent Content Oversight Board is going to decide on Wednesday whether President Trump will remain banned from the platforms. That put us on alert for that stock on Wednesday. Also, we got a cut by CFRA from hold to buy. Basically, Facebook's had a lot of love in the wake of earnings. The stocks run higher, and FRA saying it's time to pull back. The opposite story is true for Twitter. Twitter has had a horrid few days in the wake of earnings, and we see the stock down. But here's the change in the story. Activist investor Elliott Management, according to sources, has bought more than $200 million additional shares and increased its stake in the company. This is earnings on Friday. Whew, precipitous drop. But when we got that news on Elliott Management, we saw a little tick higher. So investors getting a little more confidence in the stock after that move by the activist investor in a Bloomberg scoop. Flip up the boards. The biggest points movers on the NASDAQ 100 on Monday. This is the stock year to date, by the way. Twitter was outperforming Facebook until earnings, and the story changed. Let's get to Tesla and Apple, though. Tesla, the biggest points decliner on the NASDAQ 100. Reports out of Germany over the weekend that we won't see production out of the Berlin Gigafactory until January. We were hoping for some action by the end of this year, but battery supply issues are hampering Tesla's activities, weighing heavy on the stock, down 3.5%. And finally, Apple. On a day where tech's down and Apple is in a major trial against Epic Games, we're up by almost 0.8%. Investors pretty sanguine about this. We're about to find out why. Emily.
All right, Ed, yes, we're going to talk about this Apple Epic trial throughout the show. Our top story, of course, this huge face-off happening in court. The two companies embroiled in a high-stakes antitrust case over practices related to the iPhone maker's App Store. Testimony kicking off today with Epic CEO Tim Sweeney taking the stand. Joining us with the latest are Mark Gurman, who, of course, covers Apple and Epic for us. So, Mark, walk us through the big highlights of the day and, of course, Tim Sweeney's testimony. What did he have to say?
Yeah, so far, Emily, we've gotten Tim Sweeney's testimony, his perspective. As we speak, he's being cross-examined right now by lawyers for Apple. And his perspective is really simple, that he believes Apple is operating the App Store like a monopoly. It's not giving user choice and developer choice to use, different app stores out of Apple's own built-in app store. and therefore creating this issue. Of course, Apple also had their opening statement today, and their point was that Epic simply does not want to pay for the innovation and the services and Apple's other offerings related to the App Store. And these are the same arguments we've heard over and over again. The impression I'm getting so far is that the judge is not necessarily buying into Epic's arguments. And this is something that could have been expected, no matter what Epic really says about Apple, no matter how many times they call them the big bad wolf, no matter what issues are at stake or concerns you have with Apple's, allegedly, monopolistic tendencies, there still is a contract at play. And from a legal perspective, that really does, lead the day at the end.
So let's talk about the argument that Apple made in its opening testimony. An excerpt from that. Connections between consumers and developers have launched businesses that wouldn't have otherwise existed, created millions of jobs worldwide, and unleashed more than a decade of economic growth. This case is a fundamental assault on Apple's secure and integrated ecosystem, which is what has made all that growth possible. Mark, what do you make of Apple's primary line of argument here?
Yeah, Epic is basically trying to shoot down, and they spent a good chunk of the morning trying to shoot down the privacy and security element to it. What Epic did a few times today was point to Mac OS. Mac OS is the operating system that runs on the Mac, right, versus iOS, which runs on the iPhone. Now, what Epic is saying is that Apple could use the same security protections it uses on the Mac and on the iPhone, because Apple, of course, markets the Mac security as good enough. Now, what I should tell you are the fundamental differences between the iPhone and the Mac ecosystems. On the Mac, you can get an Apple-issued Mac App Store that takes the same commission rates as the iPhone. But what you can also do is you can set up third-party app stores. You can install applications from the web or anywhere. Developers can have any payment method they want. And the thing that Epic is claiming is that the iPhone can't do any of that. The question is why, and their statement is they should, if Apple really thinks the privacy and security on the Mac is good enough to handle that functionality on their Mac platform.
Okay, so quickly, Mark, lay out the road ahead. We're expecting Apple executives from Phil Schiller to Tim Cook also to testify.
Yeah, so the road ahead this week, there's going to be a lot of testimony and cross-examination of people from Epic Games. Obviously, Sweeney, the CEO of Epic, is still on the stand for cross-examination. Up next will be a senior engineering executive from Epic, and you're likely to see other marketing and engineering folks from Epic throughout this week. Next week is when you're really going to see those testimonies, likely from Tim Cook, Phil Schiller, Craig Federighi, Apple software chief, and perhaps other Apple executives too.
All right, and you and we will be covering all the fireworks. Bloomberg's Mark Gurman, thanks so much for laying that out for us. We're going to talk more about Apple's dominance later in the show with CJ Prober, the CEO of the location tracking company Tile, coming up in just a bit. Also coming up, volatility is not unique to the crypto world. In fact, Bitcoin is less volatile than Apple and Tesla stock. More on that and other insights from the CEO of Binance, or so he claims. Next, this is Bloomberg. Cryptocurrencies starting the week with gusto. The biggest mover Monday was Ethereum Classic, up over 770% so far this year. As for Bitcoin, it's still volatile, but might be less volatile than other assets like Apple or Tesla. That is, at least according to Binance CEO Changpeng Zhao, who joined Bloomberg's Matt Miller on Bloomberg Television earlier today.
If you learn about cryptocurrencies, blockchain, you have to go through Bitcoin. You learn about Bitcoin first. But after that, they do venture out and say, hey, well, now there's a blockchain. Blockchain is not just Bitcoin. There's a lot more you can do by, in addition to just transferring value. You can do smart contracts. You can do many other things. You can do NFTs. So all of these use cases are booming right now, and people need the other coins to do this type of new transactions. Ethereum is one of those clear examples. That's probably why Ethereum is going up.
CZ, my concern is, and you've been tweeting about this, a lot of people rip on Bitcoin and they don't even know what a public key is. Or you have people investing in your BNB, but they don't know the use case. They're just jumping in because the price is rising. And if you have too many people like that, that's irrational exuberance. That's froth in the system, and it doesn't provide a solid base for prices. That's why we get even more volatility. How do you look at volatility and people that are serious investors in crypto?
So I think it's the same proportion of people who are in traditional stock markets or any markets that's actively traded. There's always guys who do fundamental research and understand the underlying assets in a lot of detail. Some people understand BNB more than I do. And then there are people who just follow other people, who just following the herd. There's always a large number of people having the herd mentality than the guys who actually do serious research. That's just how advanced our civilization is right now, which is everywhere. So it's not unique to crypto. It is in crypto like that. The herd followers are less committed. Whenever there's some negative news, they run away. Whenever there's positive news, they try to rush in. So they do cause more volatility versus the sort of the diehard fans who understand and really love the projects. But it's the same thing in stock markets. There's nothing new in crypto. So volatility is everywhere. And actually Bitcoin, Bitcoin is probably less volatile than similar sized assets like Apple stock or even Tesla stock.
I wonder about Binance. I talked to Anthony Trenchev about this with Nexo as well. They don't have any plans to go public right now, and you've said you don't have any plans to go public. Why not access the public markets, especially right now when your popularity, the momentum is there?
Sure. So I think we have a very good example of a private company that's done really, really well, and it's Bloomberg, right? So I used to be my ex-employer as well. So Bloomberg never went public. I think going public is a good option for many companies. It's a good way to raise money. It's a good way to for early investors and sometimes even founders to exit partially or completely, or at least have the option to do so later on, and also have publicly discoverable pricing on the trading market. But for many organizations, they are sufficiently well funded. They have sufficiently solid businesses that are profit generating, same as Bloomberg. So they don't really need to go. They don't have no need to raise the money. And then the investors may be long-term driven. They are not really looking for a public exit anytime soon. There are still other ways to exit a business if you really want to. So I think basically it's not like, and only a very tiny percentage of businesses, even the profitable long-term businesses, actually go public. So public is an option for many, but it's not a mandatory thing for every business.
That was Binance CEO Changpeng Zhao. All right, coming up, location tracking apps go tete-a-tete. We're going to talk to Tile CEO CJ Prober about why he's not happy with Apple and its new AirTags. Plus, later in the show, e-commerce has seen an incredible boom amidst the COVID-19 pandemic, and Stitch Fix is indeed riding that wave. We're going to hear from founder Katrina Lake and President Elizabeth Spaulding about what's trending and what's next as Spaulding prepares to take over the reins. This is Bloomberg. Breaking news, the New York Times is reporting that Pfizer, the FDA's Pfizer vaccine for 12 to 15-year-olds, the FDA will approve that vaccine next week. This again, according to the New York Times. We know that Pfizer has been testing the COVID vaccine on younger children, pre-teenagers, aged 12 to 15. And the New York Times reporting that the FDA will approve that vaccine next week. We know Moderna is in the testing phase of a vaccine for younger children as well, and we'll continue to follow developments there. Pfizer shares slightly up right now after hours. Meantime, back to the big case of the day. Apple's court battle with Fortnite maker Epic, not the only tech clash in the headlines. The iPhone maker is also under fire from Tile, a device tracking company that makes small locator beacons that clip onto your keys or in your purse to track their whereabouts. Tile says that Apple's new tracking AirTags so seamlessly pair with a user's iPhone that it puts companies like Tile at a disadvantage. Here to discuss, Tile CEO CJ Prober with us now from Menlo Park, California. CJ, let's start with your big concerns about Apple, especially on the back of this AirTag announcement, which happened a couple of weeks ago, and I'm sure you saw it coming. But what is your main complaint?
Welcomes competition. We've been competing for 8 years with small companies to Fortune 50 companies. So we welcome competition from Apple, but we think it needs to be fair. And if you look at the history between Tile and Apple, we had a very symbiotic relationship. They sold Tile in our stores. We were highlighted in 2019 at their Worldwide Developers Conference. And then they launched Find My in 2019. And right when they launched their Find My app, which is effectively a competitor of Tile, they made a number of changes to their OS that made it very difficult for our customers to enable Tile. And then once they got it enabled, they started showing notifications that basically made it seem like Tile was broken. And then if you fast forward to the AirTag launch of a couple of weeks ago, basically the main points of differentiation of AirTags vis-a-vis Tile are enabled via platform capabilities that we don't have access to. So to give you an example, you mentioned the seamless activation. Another one is ultra wideband. That's a technology that's been in the iPhone since 2019. It enables a differentiated type of finding experiences. And we've been seeking to access that since it made its introduction into the iPhone and have been denied. But of course, Apple has access to that capability. Those are just a couple of examples of how we're disadvantaged.
I know it's only been a few weeks since the AirTag unveiling, but has this dented Tile sales at all, or has it been a publicity boost for Tile's products? I mean, how do you see this playing out long term?
Well, it's only been a few days, actually. So the AirTags launch became available on the 30th. So it's super early, too early to tell. The good news is that Tile is very well positioned. So we've got a super differentiated product. We're cross-platform. We have many form factors. You don't need an accessory to attach it to your things. We're louder. We've got better range. So we have a lot going for us from a product perspective. So we feel good about our competitive position, but we don't feel like we should be competing in the way we are with Apple. And what's really important to note is this is much broader than Tile. This is about long-term consumer choice, innovation thriving, and lower prices. And that's why we're being so vocal about this. Of course, it's impacting us. But when you think about the coalition we formed with Epic and Match and Spotify, this is an issue that impacts all industries, consumers across the globe, and we want competition to thrive, innovation to thrive, and we think consumers should have more choices.
And as you mentioned, of course, there are other companies that have a problem with how Apple operates, not the least of which is Epic. Also, in this coalition, you've got Spotify, you've got Match, you've got Tile. What about the counter argument? If you want to talk about innovation, why shouldn't Apple be able to create a product that potentially works better or integrates better with Apple products than Tile?
Yeah, it's a great question. The two aren't mutually exclusive. So Apple doesn't need to take advantage of its monopoly position of the App Store and of the iPhone and enable advantages that only they can partake in. They can make those advantages available to all companies so we can compete on a level playing field. And if you think about it, and if you take this to its ultimate conclusion, Apple has the potential to go from a $2 trillion company to a $5 trillion company to a $10 trillion company because they can basically identify categories, and all categories now go through the phone. 85% of US people have a smartphone. People spend 4 hours a day or more on their smartphone. So they can identify a category, create advantages for themselves in that category, disadvantage the competition like they've done to us, and basically grab a massive market share in that category. And if you look at Apple's results from the first quarter, 90 billion in revenue, 54% growth, EPS 200%. If that's not a runaway monopoly train, I don't know what is.
Now, it's interesting you point out that Apple is a $2 trillion company. In its opening statements today, Apple points out that Epic is a $28 billion company and, quote, doesn't want to pay for Apple's innovations anymore. So Epic, Apple says, is demanding the court force it into the App Store, untested, untrusted apps, which is something Apple has never done. Apple's unwavering commitment to safety, security, reliability, and quality doesn't allow it. Antitrust laws don't require it. What's your response to Apple's counter argument to what Epic is claiming?
You know, the Epic litigation is a small milestone in a much broader effort. So whether Epic wins or loses this litigation, legislative action is required in order to enable a level playing field for all developers, in order for innovation to continue to thrive, in order for there to be competition, in order for there to be consumer choice. And so while Epic is an ally with us and Spotify and Match and the 50, 60 other developers that have joined that coalition, despite the threat of retaliation from Apple, this is a global issue that cuts across industries, and this litigation is going to expose some of the realities of Apple's business, but it's really a small milestone. What matters much more is the legislative action that we're starting to see out of the EU, where they found that Apple's policies were anti-competitive. And if you look at the bipartisan App Store hearing that happened a couple of weeks ago, there was very clear alignment that Apple's got an issue here. So the Epic litigation is one small step in a much broader effort to bring a level playing field and consumer choice to the market.
So, quick question. I mean, what do you want? Do you think the App Store should be separated from Apple? You know, what is a remedy that you believe would be fair?
Yeah, you know, I would encourage this. It's a more nuanced answer and more detailed answer. I would encourage listeners to go to the App Store Senate hearing and read our testimony, read the testimony from Spotify and Match. But at the highest level, what we're looking for is a level playing field. So when we are competing with Apple in a category, we should be competing fairly and no excessive taxes on developers, because those costs get passed on to consumers and eliminate consumer choice. So that at the highest level, that's what we're looking for.
Okay. CJ Prover, thanks for laying it out for us, the CEO of Tile. Appreciate hearing your perspective today. All right, coming up, a decade after founding Stitch Fix, CEO Katrina Lake is passing the reins to a new leader. We're going to talk to Lake and her successor next about why now and the next chapter in personalized apparel coming up. This is Bloomberg.
Well, it's a duopoly. There are two companies together. They control 100% of the smartphone market, or something like 99.9%. And if you look in a lot of territories, Apple has the majority of revenue in many of these countries. Other countries, Google has majority of revenue, but it's impossible to look at a territory and say that in this place, Apple or Google is not a monopoly. They have monopoly, and they have business practices that only a monopoly could get away with.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. That was Epic Games CEO Tim Sweeney laying out a case to come against Apple on Bloomberg Studio 1.0 last year. Today in trial, Apple saying that, quote, Epic speculates about a world where Apple was a different company and asked this court to place a big bet that the world is better than the one we live in. But it isn't. The result for consumers and developers will be less security, less privacy, less reliability, lower quality, less choice. Let's get more on this colorful day in court from Bloomberg's Ed Ludlow. Of course, Tim Sweeney testifying in court today. Ed, give us some more context here. So many complicated issues at play.
Yeah, so Epic and Tim Sweeney are arguing that Apple operates a walled garden within iOS because the App Store is the only way you can download the apps you want, the only way that you can pay for the apps you want. What they want to see is more options. So if you have an iOS device like an iPhone, you don't just have to go to the App Store. You could go to another store and download the app you want. Apple says, hold on a minute. Through iOS and the App Store, you get access to 1 billion devices around the world. 84% of the apps on the App Store are free anyway, which is good for developers. And we're only charging commissions of 15% for those smaller businesses. Flip up the boards, though, and let's talk about what is at stake here with Apple. If you're an investor, why do you care? This is why. Last year, in fiscal 2020, Apple earned $54 billion of revenue from services, the vast majority from the App Store. Tim Sweeney argued in court on Monday that Apple is making more profit from the App Store than the app developers are themselves. That $54 billion is almost as much as it made on Mac and iPad combined, and that is what it's trying to protect. Flip up the boards a final time. On a day where technology stocks were under pressure, biggest points gainer on the NASDAQ 100? Apple, up 0.8%. What are investors reading into this, and why are they so calm? It's going to take weeks for us to find out. Emily.
Right, and of course, the growth of the services business is a big bet that Tim Cook made as he took over as CEO. Our Ed Ludlow, thanks so much, Ed, for the specifics there. Moving on to another story now, and that is Stitch Fix. In 2011, Katrina Lake founded Stitch Fix with a vision to revolutionize the apparel shopping and styling experience. The company has since expanded from women's wear to kids, plus size, maternity, and men. In 2017, Lake became one of the youngest women to take a company public, currently with a $4.6 billion market cap. Now, after a decade at the helm, Lake is leaving the CEO role and will stay on as executive chair and as an employee focused on social impact. Her successor is President Elizabeth Spaulding, who came to Stitch Fix after more than 2 decades at the consulting firm Bain. Lake and Spaulding joined us to talk about why now and what's next.
This is a long time in the making. And for a long time, I have known and totally been open to the possibility that there was going to be able to be somebody that could help us see more possibility at Stitch Fix and open up kind of how, I've felt such deep conviction in what personalization can mean in this space. And at the same time, we still have so much work ahead of us. And so, from the moment I met Elizabeth a couple of years ago, I had this spark of like, this really could be that person that really can open up possibility for us, that really has that like ambition and excitement and understanding of what we can do. And so really from the moment that I met her a couple of years ago, we've been kind of orchestrating this transition and to be where we are today. And so we're really excited to be able to share that news, it's a little bit of a relief, honestly, where we've both been working on this for so long, to be able to share it with the world, us being able to work hand in hand over the last 12 plus months, especially during a time of crisis like COVID. It's really actually been, as much as of course the last year has been super challenging, it's been a really great way for us to build a really strong foundation of a relationship together to set the stage for the future.
I'd love to hear the story, how you asked her to do this, the courtship, how you popped the question, if you will. It's a big question.
From the very early days, we talked about a role that was going to be with succession planning in mind. And so, I think we talked about a role that was going to be meaningful in scope from the beginning, but, had in mind this idea that, that Elizabeth would be taking the reins eventually. And so I don't know if like the popping the question was as much of the like dramatic part, as much as really like we spent a lot of quality time together talking about really deep things. We got an executive coach to work together from our very first day working together. And so this really has been, kind of these marriage analogies are right ones, because it really has been a labor of love.
Elizabeth, you started working at Stitch Fix a little over a year ago after working at Bain for more than 2 decades. What was this process like from your perspective?
Yeah, well, I mean, first of all, I just feel so grateful to have met Katrina and that she was looking for somebody to play this exciting role. I think in my vantage point in my prior role, I sat at this intersection of consumer and technology, and Stitch Fix was like the needle in the haystack, this company that somehow really got the consumer, had the merchandising, the supply chain, and having worked with a lot of those traditional players, I just knew it was not in their DNA to transform for this new world we're living in. And then you have a lot of these tech platforms that they dabble in commerce, but it's not really their core business. And then in meeting Katrina, it just became clear both we had chemistry, but also Katrina has so little ego. She's kind of up for anybody who's going to make things better. And that was just so unique to me and so surprising, to be honest. And one of the conversations I remember is her kind of bringing up this idea of like me being there for the second founding of the company.
Katrina, I wonder, there has to be some emotion there and you're not going anywhere. You're becoming executive chair. You are staying on as an employee. You're going to focus on social impact. But is there any emotion in sort of letting go a little? And what does that feel like?
I do feel a little bit of like, I don't know if trepidation is the right word, but like I'm starting a new job, to your point. Like I'm starting a role as executive chairman. I am really excited to be able to look at the world of social impact and sustainability and how I can really have an impact on our company, but also the industry in that way. And that's all going to be new and different. And so, I have a little bit of like new job jitters of like, you're really excited for it, but, also a little bit like, what is this really going to be like? And so that's kind of where I feel emotionally now.
Elizabeth, Stitch Fix has 8,000 employees and stylists, and Bain is known for going into companies and changing them. Do you think there's change needed at Stitch Fix, and what would that change be?
I mean, I think that was actually part of the idea and change in the most positive sense. I mean, the engine that Stitch Fix has built around this notion of human touch personalization powered by data science is so unique, but it's only the beginning. And so I think from the change aspect, change can mean so many different things, but I think the transformative change, and that's actually a lot of the language Katrina and I have been using. We had an all hands this morning, and a lot of that was focused on change in the most positive sense. Like, I mean, it's kind of, I think for any company, it's sort of change or die. Like we need to innovate and we need to do new things. And we're in this fortunate situation that the past year, I think, has just demonstrated for us, like now is our time. Consumers are shifting online at record rates in apparel. We think it went from 25 to 40% just over the time period of COVID. And that is really the moment that is meant for Stitch Fix. And what's so exciting to us is the purchase occasions that are now moving online are the one that are so uniquely suited for us. It's the ones that are about browse and discovery and personalization. And so how do we make our model available to everybody? How do we make it as accessible as possible? How do we bring personalized shopping to every consumer in this very unique way with the power of our personalization capabilities, our styling community? And so, yeah, I mean, I do think I'm here for change, but change for the good and with big ambition of what we can do.
So maybe there wasn't the drama of a popping the question moment, but I'd love to hear the story about how you guys first met and when you sort of first realized that this could be a thing from both of you.
I'm friends with one of our board members, actually our original investor, Steve Anderson of Baseline. And as I was kind of exploring the next chapter in my career, he was like, I really just think you need to meet Katrina. And so that's really how it all began. And Katrina and I met, and there just was this chemistry. And to her point, we've known each other a while. I mean, we went through various phases of getting to know each other. What's the role I could start to play in the business? This openness of me potentially succeeding her, like it wasn't like one big pop. It was sort of this evolving dialogue that occurred over time. And I feel like we so deeply invested in really understanding each other as human beings before I joined the company that it felt like we had this like truly deep relationship from early on. I actually kind of like to joke, as she was describing the role she could envision me wanting to play, it was like, it reminded me of honestly meeting my husband. I'm like, is this guy too good to be true? And I kind of felt that way about Katrina. I'm like, can I really trust this? And eventually it's all working out.
So does that mean there were a lot of coffees, dinners, breakfasts, phone calls, texts, emojis, or however we do it these days?
It was really funny. There are a lot of courting analogies because it was a lot of text messages and a lot of phone calls and a lot of walks. We did a lot. It was pre-COVID, and we still did a lot of walks in the Presidio and near the Golden Gate Bridge. And we have some. Actually, I was thinking when we shared the news, we could have shared a selfie from back then too, because I think there's some like beautiful scenery and selfies along the way. But it was, it was a great way to be able to get to know each other and to be able to start this relationship right.
Coming up, part 2 of that conversation. Fewer blazers and more athleisure is in. Headbands, necklaces, and scrunchies also in. Stitch Fix's outgoing and incoming CEOs Katrina Lake and Elizabeth Spalding talk to us about styling and shopping trends as the workforce heads back to work in hybrid mode. This is Bloomberg. When the COVID-19 pandemic hit, the U.S. and lockdowns began. And for a time, no one was buying new clothes or much of anything, causing Stitch Fix to struggle and lay off more than 1,000 employees. But then its business rebounded as a consumer favorite and a safe way to shop. Stock hit a high in January and has since come down a bit, leaving some with a question. What happens to Stitch Fix if and when people go back to retail stores? I spoke with outgoing and incoming CEOs Katrina Lake and Elizabeth Spaulding recently as part of our Work Shifting segment.
You know, we were able to iterate our merchandise away from categories like work and blazers and into categories like athleisure that people are looking for. The notion of trying things on in the comfort of your own home has never been more compelling than in the last year. And so, you know, while people were buying less clothes, our model was much, much more attractive than existing models. And so, you know, e-commerce was accelerated. I think acceptance of our model was accelerated. And, you know, I think there's, you know, just a larger understanding that personalization is super important in this space, that, you know, suddenly people are starting to realize they live with all their things. They realize there's a few things I really, really love. And so, you know, to find the one pair of jeans that somebody really, really loves is exactly what we are best in the world at doing. And so, you know, there actually were a lot of underlying trends this last year that really accelerated the opportunity for our business.
Elizabeth, Stitch Fix shares hit a big high in January, but have come down since then. How concerned are you that once people can go back to stores, they will go back to stores in droves, and that could dent some of this new demand that you've seen?
You know, Emily, it's such a good question, because one might think, like, are we going to go back to the way we did things before? And I think what we've seen is that consumer behavior has really shifted. People have leaned in and adopted. You know, one thing we've seen over this time period, there have been moments of the world opening back up. We actually see an acceleration when that happens because people are spending again. They want to go out. We've actually seen in some of the geographies, you know, the South, the Pacific Northwest, places where there was retail foot traffic and opening, we actually were outperforming our overall growth rate, which to us is a sign that people are really voting with their feet and moving into this new model of shopping. And so I think we feel more confident than ever that this is serving a way that people, wouldn't you rather, you know, go out to dinner with friends, have lunch with your mom, then go shopping and try on things in a department store clothing room? Like, wouldn't you rather have that time back? And so I think one of the things I had looked at before joining was like, what are the elements of value? What are the things people love so much about Stitch Fix? And part of it is the tremendous convenience, and that's never going to go away. Part of it is we make people feel more attractive because of this notion of personalization. Those are enduring values that I think are going to be even more beneficial. And what we're doing with our shopping feed and that shop experience is we kind of feel like we're moving from our DVD era into the streaming era, where at any moment you can see what's there for you. And I think that just opens up the entire market for us, and in a way that is going to be accessible to all consumers.
I do think that we are seeing a broader casualization trend where, you know, people are not anticipating, like everybody who's, you know, in the office 5 days a week, certainly wearing a suit 5 days a week, like that trend is not going to be as strong as it was before. That contingent of people is not going to be as large as it was before. And so we are seeing, and to be clear, this was happening before. Like, we used to get request notes that were like, I can wear jeans at work now. What kind of jeans should I wear? And so, you know, this casualization of the workforce is kind of one thing that we're certainly seeing.
During kind of this overall period, we've seen our athleisure business grow 350%. You know, we think that extraordinary growth is going to taper, but we're still seeing people kind of opting into that. And as they're beginning to request things, hey, I might be in the office a little more, they're actually asking for comfortable work clothes. And so we're kind of calling it work leisure, you know, and a lot of people are saying, like, I want to work in a hybrid mode in the future. We are starting to see those date night requests again. Actually, one fun nugget and trend we saw was 130% increase in our headband category, which I like to think was the Amanda Gorman effect from the inauguration.
Wow.
But it's finding these signals of what people are looking for, you know, sort of those micro trends to just more broadly wanting to start to go out again. And that's great for us because it means that people are shopping again.
So if there's one headline takeaway, it's more headbands. Is that it? What else do I need to set some trends for me, Elizabeth? What else do I need to know? What else do I need in my closet?
All of the Zoom accessories, I think, have been doing really well. Like, I think the earring necklace sets have been doing really well. There's been a lot of people dressing for Zoom that, I mean, we all understand where people are definitely, in a world where you don't get to have the whole outfit, shown off, where, you can selectively do the headband, the scrunchies. Like, we've actually sold a lot of hair accessories lately, but, anything that's kind of a way to show your personality on Zoom is definitely something that we've seen a lot of good sales in.
What does the next 10 years look like?
I mean, I think the big idea is that we have been so successful with this idea of getting some information from you, telling us what you're looking for, and then taking the benefit of our algorithms and our stylists to pick out a handful of items, send things, and you pick what you love and send back what you don't. And that's been a very successful model. We keep getting better and better. But most consumers might want something at the tip of their finger. How can I just see something right now? And so really our foray into this personalized shopping experience is, I think, going to be a big part of our next 10 years. And so the idea that you, Emily, can open up your own personal store, you can see, that new pair of white jeans you need for summer, and everything in that store fits you perfectly and represents you. That's just like a fundamentally different way to shop. Imagine our stylists being inside that experience and making suggestions based on what they've seen from you in the past, or live chatting with somebody just immediately as you're thinking about the weekend. The ability for us to bring all of those elements of our offering together at the tip of a finger, I think, is what's so powerful. And really what I think will characterize this next phase of e-commerce is this movement from search and scroll to browse and discovery, which we're so uniquely suited to be able to do. The nature of transactional to relationship based, like we are all about building these deep human relationships. And so I think the future of Stitch Fix is like all of the selection in the world curated just for you. What are those items that are really just meant for you, and having the ability to engage with human touch at the moment that you want it. And that really removes the need for a lot of the inconvenient elements of how shopping worked in the past.
Stitch Fix incoming CEO Elizabeth Spaulding there, and founder Katrina Lake. Meantime, Bill and Melinda Gates have announced they are ending their marriage after 27 years. In a tweet today on Bill Gates' feed, a joint statement says the couple has raised 3 wonderful children and built a foundation that works all over the world to enable all people to lead healthy and productive lives. It goes on to say the pair will still work together at their foundation, but they're asking for space and privacy in navigating a new life. The statement is signed by both Bill and Melinda Gates. All right, coming up, we'll return to the showdown in Silicon Valley with Apple and Fortnite locking legal horns over App Store fees. That's next. This is Bloomberg. Wrapping up our top story of the day, Epic Games alleging that Apple's App Store has left users and developers trapped in an anti-competitive marketplace, while the iPhone maker is accusing the creator of Fortnite of a fundamental assault on their business model. Joining us now, Bloomberg legal reporter Malathi Nayak. Malathi, thank you so much for joining us. So a lot of complicated issues at play here. In the most simplest terms, what does Epic have to prove?
So Epic, at the end of the day here, has to prove that Apple's App Store is a monopoly and try to explain why Apple is violating antitrust law by not allowing iOS mobile users to have other app marketplaces like Google Play and other app marketplaces on iOS mobile devices. In addition to having the App Store. So at the end of the day, that's what Epic has to prove here.
So then on the other side, what does Apple need to prove or disprove in this case?
Yeah, Apple has to show that the 30% cut that they charge developers, the standard 30% cut that they call it, is something that's across the industry, and it's an industry standard. And they also have to show that any sort of control that they have over the App Store now is necessary because it benefits consumers, because Apple is making sure that there aren't any privacy and security breaches and that, there isn't malware and other bad stuff that gets on our phones because the App Store isn't secure. So that's what Apple has to prove.
So what are you going to be looking for next?
Sure. So today we had both sides, get started with their opening arguments. They talked about the main issues in broad strokes. Tim Sweeney actually just took the stand. He's the first executive who was grilled today by Apple's attorneys on whether the 30% cut was standard or not, and whether other gaming consoles like Xbox and others also charge 30%. What we'll be keeping an eye out for is really for any sort of, moments where some of these Epic executives, when they're grilled by Apple attorneys, when they are sort of not off script, if there are any sort of tense moments, or if there are any moments where Epic talks about how maybe it potentially started this fight because it needed to protect its own revenue and make sure that Apple wasn't getting in the way of its Fortnite sales.
All right, lots to continue to follow. Malathi, thank you so much for joining us. Malathi Nayak, appreciate your perspective there. All right, and that does it for this edition of Bloomberg Technology. Tomorrow, I'm going to be hosting Nextdoor CEO Sarah Fryer right here on the show. Her business seeing plenty of momentum over the last year as neighborhoods are proving to be central hubs of information as more of us work remotely. She'll be joining us tomorrow. This is Bloomberg.